All right, hi everybody. Starbucks yesterday reported their Q4 preliminary results, and the results were pretty terrible. Arguably the worst business results, operational results Starbucks has ever posted. But the stock of Starbucks barely moved, ended the day down only around 0.5%. So today we're going to look into Starbucks Q4 results and the stock market's perception of that result. And so without further ado, let's get started. All right, hi there, my name is Rene, and in this video we are going to take a look at the public statement made by Starbucks. We're going to listen to the CEO's comments on the more recent results and his plan going forward. We're going to take a look at the valuation Starbucks is trading at and what I think of the stock at the current price levels. So let's kick things off with the statement published by Starbucks, and I'm going to show you an annotated version of this. The annotations here are from the Twitter user Wasteland Capital, who's known to somewhat critically comment on company results. So let's just go through the report. So Starbucks is writing, Starbucks today reported preliminary financial results for its 13-week fiscal fourth quarter and 52-week fiscal year ended September 29th, 2024. For the fourth quarter of fiscal year 2024, global comparable store sales declined 7%. And Wasteland Capital added here that a decline of 3.5% was expected by analysts. And what I should say is that for a company like Starbucks, that's basically operating almost like a restaurant chain. Same store sales as a metric is incredibly important, even more important than total revenue, arguably. And a decline of 7% is pretty bad, and I think it's actually the third consecutive quarterly decline that Starbucks had to report. Okay, let's continue. And consolidated net revenues declined 3% to $9.1 billion or a 3% decline on a constant currency basis. GAAP earnings per share is 80 cents, down 25% over prior year. Non-GAAP earnings per share is also 80 cents, declining 24% on a constant currency basis. And Wasteland Capital again added that it's much lower, so earnings per share are much lower than expected by analysts. They then continue. The company's results were primarily driven by softness in North America's revenues in the quarter, specifically a 6% decline in US comparable store sales, driven by a 10% decline in comparable transactions, partially offset by a 4% increase in average ticket. The accelerated investments in an expanded range of product offerings, coupled with more frequent in-app promotions and integrated marketing to entice frequency across the customer base, did not improve customer behaviors. So again, what we are reading here is that Starbucks was doing something to entice customers to purchase coffee at Starbucks stores more frequently, but these efforts weren't really successful so far, which again is a bummer for investors. If we now look at China, they write, additionally, China comparable store sales declined 14%. So here the decline is even steeper. And what I should say, and what I'm going to show you right now, is that this part actually reminded me of a tweet or a series of tweets that Thomas Schuer, who's quite a well-known Twitter user, shared on Twitter a couple of weeks ago. So he apparently was to China and he shared photos of various Starbucks locations that were pretty much empty, which sort of gave us a clue of what's going on in China with regard to Starbucks, well, a few weeks ago already. And as we just saw, this is reflected in the numbers. Same-store sales declined 14%, driven by an 8% decline in average ticket, compounded by a 6% decline in comparable transactions, weighed down by intensified competition and soft macro environment that impacted consumer spending. And again, Wasteland Capital just referred to it as a total collapse. So the only additional comment I can make here is that in China, competition is just insanely high, much more intense than in the Western world. That's at least my takeaway from reading reports about the business dynamics and again, just the competitive dynamic in China. And apparently Starbucks is experiencing this intense competition as well, and it's reflected in the numbers. Okay, we're going to skip the next paragraph and then just to read one of the final paragraphs here. Given the company's CEO transition, coupled with the current state of the business, guidance will be suspended for the full fiscal year 2025. This will allow ample opportunity to complete an assessment of the business and solidify solidify key strategies while stabilizing and positioning the business for long-term growth. So again, this is not necessarily good news for investors. A company not issuing guidance for the next fiscal year should be something that should worry investors, because apparently the business is lacking clarity with regard to the outlook over the next 12 months. If you think back of the pandemic, for example, back then many companies justifiably so withdrew their guidance because they simply couldn't project their revenue and earnings over the next couple of months or even the full fiscal year. For Starbucks, the story is a little different here. They are basically withdrawing or not even issuing guidance simply because the business is going through a major transition, namely the transition to a new CEO. The business is clearly facing a lot of challenges right now and needs to develop a plan right now, which we will get to a little later. So let's continue with the strategic reset underway. That's what I was just talking about. The company remains committed to creating shareholder value and is announcing that its board of directors approved an increase in the quarterly cash dividend from 55 cents to 61 cents per share. The dividend and related increase demonstrates the company's confidence in the long-term growth. So all I can say here is that is something I truly dislike to see as an investor. The fundamentals of Starbucks seem to be deteriorating, at least in the short term. So as I just said, same-store sales declines in 3 consecutive quarters. And this is not really the period where you want to increase the dividend because your fundamentals are deteriorating. Why do you want to please shareholders here? Focus on getting the business right, first of all. So in a second, we'll be talking about the stock market's reaction to this announcement. And I'm really surprised that the stock barely moved because all I'm seeing here is fundamentals deteriorating coupled with the board of directors that is still approving a dividend increase just to please shareholders, I guess. And over the long term, this is clearly not a sustainable strategy. You can't increase your dividend forever while your business fundamentals are declining. Okay, let's focus on the last paragraph of that announcement. Despite our heightened investments, we were unable to change the trajectory of our traffic decline, resulting in pressures in both our top line and bottom line. While our efficiency efforts continued to produce according to plan, they were not enough to outpace the impact of the decline in traffic, commented Rachel Ruggeri, Chief Financial Officer. We are developing a plan to turn around our business, but it will take time. We want to amplify our confidence in the business and provide some certainty as we drive our turnaround. For that reason, we have increased our dividend, Ruggeri added. Again, what I would dislike to see as a Starbucks shareholder, and I'm not a Starbucks shareholder myself, is that even the executive team is using the term turnaround here. And as we all know and learn from the greatest investor of all time, Warren Buffett, turnarounds seldom turn. Like for me, Starbucks is not your typical turnaround story, but the company is certainly facing some more structural headwinds here right now and needs to find a solution to that. And as, again, Waste and Capital highlighted here, what exactly is the plan here? The CEO actually made an announcement with regard to this, which we will look at in just a second. But I'm not really sure if management has a plan here already. I think they are just buying themselves time by not issuing guidance, which is probably a fair move. But for investors, this means uncertainty. And most market participants, they dislike uncertainty. So what I'm seeing here is that once again, apparently the demand for Starbucks products is in decline. What are the reasons for this? Is it low consumer confidence in the macro environment? I don't know. I guess it can be partly attributed to these macro factors. But on the other hand, it may be other things, or there may be other things at play here, like for example, consumers becoming more health conscious, maybe trying to reduce their sugar intake. Maybe it's an intensified competition. In China, it certainly is. So again, I truly think Starbucks needs to develop a true and concrete plan to turn the ship around here and to grow again in the coming quarters and years. So, and I already mentioned that the stock price reaction actually surprised me. So again, this is basically the worst report Starbucks ever had to issue, and actually looked up a comment by an industry expert. And this expert is called Peter Saleh, and he wrote, or he said, the traffic number that we saw out of Starbucks in the US was, aside from the pandemic, worse. The worst number we've ever seen, even worse than the financial crisis. I don't know if that is a pricing problem. In my mind, I don't think it is. I think this is a messaging problem, probably a throughput problem. I think they're working hard on the marketing. You're already seeing some of the marketing chain changing. And I think what's also worth pointing out here is that as soon as Starbucks announced the new CEO back in August, announced that Brian Niccol, the former Chipotle executive, the former Chipotle CEO, who has been serving at Chipotle ever since 2018 and who has clearly made Chipotle a better business. When that announcement was made, Starbucks stock soared. I think it soared more than 20% in a single day, adding, I don't really remember, but I think multiple billions, more than 10 billion US dollars in market cap to the stock, which back then, I don't know, I already found quite questionable. Is really one person, even though it's the leader of the business, really worth that much? I don't know. I think investors are giving Niccol a lot of credibility here, and probably deservedly so, just if you look at his track record. But it really seems like he took over a quote-unquote dumpster fire. And it remains to be seen whether he can really turn the ship around. And I'm not sure if that turnaround story is really reflected in the stock price of Starbucks yet, because I think the stock is still trading at quite an elevated level. We'll look at Starbucks valuation later in this video. So what I want to focus on next is actually the plan that Niccol is trying to deliver or to express to shareholders. So let's actually take a look at a clip of him, and I'm just going to play it to you, and I might add a few comments to the clip myself. I'm actually going to watch this clip the first time myself. So let's have a look.
I think, as you know, last month I made a commitment that we would get back to Starbucks. That means focusing on what has always set Starbucks apart: a welcoming coffee house where people gather and where we serve the finest coffee, handcrafted by our skilled baristas. It's our enduring identity, and it's why millions of customers around the world visit Starbucks every single day. People love Starbucks, but I've heard from some customers that we've drifted from our core, that we've made it harder to be a customer than it should be, and that we've stopped communicating with them. As a result, some are visiting less often, and I think today's results tell that same story. To welcome all our customers back and return to growth, we need to fundamentally change our recent strategy. Back to Starbucks is that fundamental change. I believe that our problems are very fixable and that we have significant strengths to build on. I've spent my career understanding, stewarding, and building brands, and it's clear the Starbucks brand is strong and enduring. When we stay true to our core identity and focus on delivering a great partner and customer experience, our customers come, and importantly, they come back.
All right. What I will say here is what I like about his messaging, and this has already become clear when he took over in August, is that he's really laser focused on the consumer here and the consumer experience. However, what he hasn't addressed so far is that part of the consumer experience is also the price you have to pay for the experience or the product that you are getting in return. And maybe more specifically, the price to value ratio. And I think aside maybe more structural dynamics like a shift to health consciousness, another factor that is probably impacting Starbucks here is the pricing of Starbucks. I think people are just not willing to pay $6 for a cup of coffee when they can get an almost equally attractive product from a quality point of view for maybe half the price, or $4, or in China maybe even for $2. Okay, let's hear what else he had to say.
Since taking this role, I've been digging in to understand our business. I've spent most of my time in stores talking with our partners and customers. I've also met with support center teams. I already have some learnings, and we're applying those learnings to stabilize the business in the near term and to shape our go-forward strategy. We have a clear plan, and we are already taking quick action. Regardless of any challenges in the consumer environment, we know we must operate at our best every time we serve our customers. I look forward to sharing more and taking questions on next week's earnings call. But today, I want to share some of what I've seen and where we need to focus. At Starbucks, coffee comes first. No one matches our expertise, our deep engagement with coffee farmers, our skilled roasters, the premium equipment we use in our coffee houses, and the skill of our baristas are all unmatched. We offer something for everyone. Fresh brewed coffee from our Clover Vertica.
I need to stop you again. So again, if I were a Starbucks shareholder, what would bother me a little bit is that what he's expressing here now is a lot of ambiguous, vague ideas. What I'm lacking here is a clear vision what needs to change at Starbucks. Not sure if that changes, but so far he has said quite a lot without saying anything, I think.
High quality espresso for everything from Americanos to flat whites, innovations in cold coffee with our reformulated iced coffee, and the popular iced shaken espresso platform. Through product development, marketing, and in-store experience, we need to remind everyone that we are and always have been Starbucks Coffee Company. From the very beginning, Starbucks has always been about our Green Apron partners. Everything we do starts and ends with them. We must ensure our baristas have the time and tools they need to provide exceptional customer service, and that they are supported by strong leaders and managers across every store. Every person at Starbucks must work harder to support our retail teams, moving faster to respond to their feedback and get them what they need. Our Green Apron partners want to provide exceptional service to our customers. And as leaders, we need to remove those things that might stop them from doing that. We will also build on our legacy by making Starbucks the best job in retail, offering our baristas meaningful career growth and industry-leading benefits like the opportunity for U.S. partners to earn a free 4-year college degree.
So again, I need to pause here. We are 3 minutes into the video, and so far all I'm hearing here are some corporate phrases, empty phrases that aren't saying much about the plan going forward.
We need to offer a great experience to our customers every single time, especially during the morning peak. We are reorienting all our work to ensure we deliver a high-quality, handcrafted beverage, prepared quickly and with care, and handed directly to the customer by our barista. This is the moment of truth. This commitment will drive every decision we make. To succeed, we need to address staffing in our stores, remove bottlenecks, and simplify things for our baristas. We need to refine mobile order and pay so it doesn't overwhelm the cafe experience. We know how to make these improvements, and when we do, we know customers will visit more often. We must reestablish ourselves.
So maybe you can tell me, if you are a regular Starbucks customer, whether things like the wait time customers experience in these Starbucks stores have been an issue more recently. I don't really go to Starbucks frequently, so I don't really know. But I wonder, or I doubt that the lack of demand or the slowing demand Starbucks is experiencing is caused by wait times in stores or the quality of the product. I'm not really sure if those are really the driving factors at play here.
Starbucks has always been a place where people come together. We are revisiting our stores to make sure we're offering the amenities you'd expect in a community coffee house. Even if customers don't want to stay in the cafe each time they visit, we know they expect our stores to look and feel like the community coffee house they remember. We have to reintroduce Starbucks to the world. We're fundamentally changing our marketing. We've been focusing on Starbucks Rewards customers rather than talking to all our customers. And we're changing that quickly, as you likely have already seen. We're prioritizing our brand, highlighting the handcrafted products customers expect, and showcasing the coffee innovation that sets Starbucks apart. We will simplify our overly complex menu, fix our pricing architecture, and ensure that every customer feels Starbucks is worth it every single time they visit. As we do all this, we're committed to innovating with discipline and prioritizing investments that will improve the experience for both our partners and customers.
All right, to avoid that the video is getting too long, I'm just going to stop here because I don't really have the impression that he's going to add much more context, much more clarity to his plan in this little video clip. So what I will say is that I think Starbucks, generally speaking, is a great business. It's a great brand. There are scale effects at play. People trust the Starbucks brand, the experience they will get in a Starbucks store. However, I would not be willing to be an owner of Starbucks stock at any price. And strictly speaking, so what we are seeing here is a business is facing some headwinds. Whether those are long-lasting headwinds or just a short-term headwind remains to be seen. But as an investor, what I like to see is a company facing short-term headwinds that maybe impact the business in the short term. The stock goes down, trades at a price that is maybe exaggerating the challenges the business has to overcome. And that's where I, as an investor, can actually end up with a market-beating return. At Starbucks, the story is a little different because this business is going through a period of decline right now, and it remains to be seen whether they can re-accelerate growth going forward. However, the stock is still trading at quite a high price. The stock is still quite pricey. So if we just head to ticker here, for example, and take a look at the price to earnings ratio of the stock, we see that the business is still trading at 27 times earnings multiple, which is quite high, especially considering that the revenues are declining right now. And that's not a price I'm willing to pay as a shareholder or as an investor. Again, I think Starbucks is a great business. If we just take a look at the revenue growth rates over the last couple of years, we are seeing pretty consistent growth of around 10%. And I think earnings probably grew at an even faster rate. If we look at the development of the operating income here, yeah, to be fair, not really. Margins are actually declining. But anyway, I'm happy to own a business that can grow its top line at a rate of around 10%, that is generating profit margins of around 15%. So now we're talking about operating profit margins that can reinvest some of its earnings back into the business, ideally at high rates, and then distribute the remaining cash produced by the business. However, I'm not willing to pay 30 times earnings, as I just said, for a business that is going through a period of challenges and is actually seeing many of its key metrics, such as same-store sales, basically across all regions, declining. So I'm not sure if you are a Starbucks shareholder. Let me know what you think of the current setup, the current challenges, the opportunity you see at the current price levels. And I guess I'll talk to you in one of my future videos. Take care.